Good Tuesday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Good. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. There's the disclaimer.
Alrighty.
I'm going to share my screen. Doing that, a reminder or a note to anyone joining us for the first time. Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, data, or analytics. If you have a question, type it into that live chat on YouTube. Will's monitoring it. He'll read it back to me. Well, to give you guys a couple minutes to put in those questions, we'll start out taking a look at the pre-market report to see if we could get insights, what's trading in a pre-market hours, and then we'll move on to the questions. So pre-market report, these are stocks trading in a pre-market hours. We have a calendar view up here, which allows you to go back dates historically to see what happened in the pre-market hours on those dates. We also have a summary of what happened. Today, we're on November 14th. So far today, we see 725 stocks are trading higher in the pre-market hours, 210 stocks trading lower. As far as volume, we got 175 or almost 175 million shares trading higher versus 69.7 million shares trading lower. And if we convert that volume to dollar value, we have $6.8 billion worth of stock trading higher versus $577 million worth of stock trading lower. So you could see here, based on this, overwhelmingly bullish in the pre-market trading. And of course, we had that CPI number come out, that it's increasing by a slower amount, or one of the slowest amounts, since 2021. So now the market is rallying on that. And just to show you how, if we just look back here in this week, we see that 6.8 billion is way above what we've seen the most recent week. So this is a big number, or a lot in dollar value, big number of buying of shares, and we still have a half hour to go. So keep in mind, these are all up to already. These are historical up to 9:30. We still have some time to go. So very busy pre-market trading so far today. Let's take a look at it from another perspective. I'm going to scroll down here, and we have a list of our most active stocks, our biggest percentage gainers and biggest percentage decliners in the pre-market. There are 288 stocks that made our biggest percentage gainers list, 51 on our biggest percentage decliners. So here you could see overwhelmingly also leans towards that bullish side. However, if we look at it, there are lots of stocks in there. There are small cap stocks included in there, ETFs, leverage products. So pretty much anything if it's trading in the pre-market hours and listed on a major U.S. exchange, and it meets our thresholds to make this list. So keep in mind, this biggest percentage gainers and decliners list meets our thresholds. It can make this list, and to narrow it down to a small group of stocks, we can use the filters above. If you have a watch list, you can filter by your watch list. We'll use this one in ETF. When I click on it, we get different ETFs to select from. Let's do this one, SPY. That's the S&P 500 ETF. And when you click on it, the list below gets filtered by stocks that are holdings in the SPY ETF, right? Which are the S&P 500 constituents. So you could see here, 80 stocks made our percentage gainers list, meaning that based on the volume and the price change, that it breached, made our biggest percentage gainers list, none on the decliners. So all bullish so far, in the pre-market trading. Let me see. We can go down here. We barely go to this list, so I'll just revisit it. And this is looking at the last 20 trading days. So it's looking at these pre-market movers in the last 20 days. And it summarizes the stocks that were gapping up in the pre-market hours versus down. And then it says how much follow through was there the rest of the day. So the stocks are up, right? All indication is that they're going to be opening higher, these stocks, right, on this list. What happens to them after the open, right? From the spot that they open, do they continue higher? Is there a follow through, or is there more money during regular trading hours pushing them even higher? Do they sell off, stay flat? Look, what happens to these situations post open? So here we have the gap up and the gap down list. All right, so on the gap up list, if we looked at all the stocks that gapped up in the morning, so you could see here there were 2,087 stocks that did that in the last 20 days. What happened to them, let's say the first half hour? So the first half hour, those are it's a high volume, it's a busy period, and include all the queued up trades in the morning, everybody like coming in, putting in their trades right after the open, rehedging. So it's a pretty busy period. So what happens from 9:30 to 10, right? So let's say it opens higher, if the stock closes at 100, if it opens at 102, so it's higher, what happens from 9:30, from that 102 to 10? So you could see here that so far in the last 20 days, 54% of those stocks continued higher, 45% lower, for an average gain of 0.2%, indicating that more often than not, there's more follow through, right? Like they open higher and there's more buying pressure behind it. Not every time, but this is, these are the percentages. By the close, it's a little bit different, as the day went on. So if we went from 9:30 all the way down, all the way to the close of the day, you could see only 49% of them were higher, 48% were lower, the rest were unchanged. But here we got a negative 0.2%. So historically, so far in the last 20 days, the upward momentum, we saw the first half hour to continue, but it doesn't look like it lasted the entire day, kind of fizzles out, right? And actually on average closes lower. So what if we but that's all the stocks, right? These are every security in there. It doesn't matter. It's a small cap, it could be an ETF, whatever it is. If it's in there, it's included. So let's narrow this down and see how a smaller group of stocks that share some common attributes, how did they perform? And I'm going to use this filter in ETF, and let's look at the S&P 500 stocks. All right, so I'm going to take the S&P 500 stocks. Now we filtered those out, and how did those do? So these are the S&P 500 stocks down here. So you could see here, these are the symbols. This is where it opened. This is where the stock was, from the open at 10 a.m. and the close. So these are the stats we're looking at. And we could compare them to the, to the original stats here. So there are 391 instances where S&P 500 stocks gapped higher. So what happened? In the first half hour, the more than half, the majority of them, they continued higher. So they opened higher and then added to those gains. So that's this 53%, 47% of them sold down for an average gain of 0.1%. By the end of the day, 52% of them were higher, 42% lower for break even. So the S&P 500 did a little bit better than overall, right? We could see here those numbers are a little bit better. So yeah, there was follow through so far in the last 20 days. There was happened to be follow through. Now, we have this big number. I don't know if today's not a typical day either, because we had that CPI number which was anticipated, and we are gapping up today already. I don't know. So let me just look at my shoulder. Over 1%, 1.3%. So keep in mind that today looks different. We have news, a big gap, and we've been running up into this number as well. So it might not be a typical day like we've seen here, right? Where these are not all days where we had CPI numbers come out and all this stuff. But this is just a look back of historically, how things traded. So Will, I gave it a couple minutes. I'll take questions now if you have them. You're on mute, Will.
Sorry about that. We had a question on YouTube asking about seasonality and the seasonality screener.
Yep.
And they're asking the years of observation. How many years does it go back?
So on the screener itself, let me take a look at it. So here's the seasonality screener. So on the screener itself, right here lists the number of years. So 11 here, right? So some of them have 10 on, I have to look, but it could be because we didn't have a data point or something just started, but these are the number of observations, years of observations right here. So right next to it, you see how many years of observations are in the
data.
In the data, yeah. And I think you have you could change it here. Now keep in mind, this is the screener. If you wanted to go look at an individual stock itself, you could do that from you could do that right from the price action analysis tool, right? So like if we go to price and action analysis tool and we want to go back further, we have more control here. All right, so than a screener, because a screener, there's limited stuff you could do because of the sheer number of stocks in there that you could calculate. But let's say we wanted to do SPY, and I'm going to switch this to seasonality. So the calculator is now on seasonality. So for seasonality, I need to state the start period and end period. So let's just say November 14th today, let's say till November 31st. So if I'm just interested in the later half of the November month, right? And here we could change the number of years. So if you wanted to do, it's defaulted to 12, let's keep that. So 12 years, go back, and and then we get stats for 12 years of data. So this is the seasonality in SPY, November 14th to November 31st in the last 12 years. If we wanted to narrow it or expand it, we could expand it like that. So now we got 17 years, or we could narrow it down and say, well, what about in the most recent 6 years? And then you can do it that way. So the idea of the screener kind of is, if you have lots of stocks that you want to get a general screen by a calendar month, right? Then you could do it that way. But if you wanted to start changing the data around in the particular stock, like the dates, the number of years, number of observations, then you could come to this tool, and the historical price return distribution, change it to seasonality. So you have to change it to seasonality mode, give it the dates, the number of years, and then you recalculate it, and then you get these stats. So these are the number, right? This is the frequency or the number of observations that were up versus down. So 83 versus 83% of the time it was up in the last 6 years. Let's go to 12. Let's come back to 12. So same thing, 83% higher. These are the observations year by year, right? The average move was 1.63%. So averaging out up moves, down moves, up 1.63%, median move 1.64%. If we separated just the positive moves and the negative moves, on average, the positive moves, so when it was positive, moved up 2.24% on average. When the move was negative, it was down 1.4%. So you could see that to the upside, even if we separated upside versus downside, not only did the upside moves happen more frequently, the magnitude of the moves to the upside exceeded the magnitude of the moves to the downside, right? See ratio 1.6. And if we just took the largest moves, max move up, max move down, and compared them, you could see max move up 4.6%. So this is between the middle of them, from the 14th to 31, right? So max move up so far 4.6%, max move down 2.5%. And if we wanted to see how that move progressed, right? So starting November 14th, we have the average from November 14th to 15th, from November 14th to 16th, November to 17th. So if we wanted to see how did that percentage progress from the 14th to the end of the month, we have two lines here. One is shown the average, one is shown the median. So it's taking the, right? So it's looking from November 14th to November 15th and looking back 12 years and taking the average of all of them and the median. Then from November 14th to November 16th, it's taking the average and the median. So this way you could see that historically it just, really continued up. It was basically, a little bit choppy, really. It started to historically look around November 20th is really when then it just started popping. But this is the, tool that if you're looking at seasonal statistics and you wanted the flexibility of changing around number of years, the dates, getting more stats on it as we go down here, here's year by year. You could come and use this tool that offers you the most flexibility on a particular stock.
Very cool. Actually, a question from Rob came in when you were going over the pre-market stats.
Yeah.
And it came in later.
Yeah.
So Rob asks, so using this filter, you there?
Yeah, I'm going to go back to the pre-market.
All right.
Yep.
So using this filter and the initial data, how would Dimitri select potential trade? And then it goes on, and what types of trades would make sense is what he's asking.
Yeah, so it's not a tool that creates a trade alert, right? To go and do a trade. What it is a tool to give you an idea of the distribution of returns, the potential movements, the magnitude of the moves, and the tendencies. Okay, so if you're considering this trade, right? If you're considering a trade in something, or you're thinking about it, and maybe you're bullish or you're bearish, and you're looking at, a either like a trade setup after the morning or an options trade or whatever, that's what it's trying to do, is give you a distribution, right? Frequencies, averages, magnitudes, so you have better information how to set it up. What are your potential returns? What are the potential losses? So it's not like per se like here's the trade and go do it. It's more of an analysis tool of, okay, what what do I see? Here's, let's just say, like, I don't know, let's open up Tesla. Now, keep in mind that this is also movement on an event, right? So there's something just happened. There's a CPI number. The market now is pricing in that well, the Fed may start lowering interest rates, and people are positioning themselves this way. So it's not just like a regular day, an event happened. So you got to always keep that in mind and factor that into your analysis, right? Because that's relevant, right? That's material that's relevant. You have to factor it into your analysis that, well, if the Fed does go on a, on a easing, almost Fed policy easing, then that will impact stock prices, of course. So here, let's just say you factored it in, and then you're like, okay, but how does the stock tend to move after, 5% gap up? So we could take a look at its gap up history and say, all right, here's Tesla. And we're looking at the biggest gaps in the last 12 biggest gaps up, right? That are not earnings related. So this is going to take out earnings. If you want earnings, you go into the earnings section. But what happened, and here we see, the biggest gap moves up on average 7.1%. Right now we're up 5%, right? So, below the average, but certainly, we're getting closer, to some of these larger gap moves. And we could see here that some of them are related to the market. Sorry. Here are the dates, right? Some of them had headline news, some of them, press releases. So these are, maybe something that Tesla announced, and on that announcement, it had a big move up. Market gap up means that's where we didn't detect any specific news, but the market was up 3.7% on this date. So here was Tesla 6.9%. So if we take these gap moves, we're like, okay, then what happens usually afterwards? Like, how does the stock behave? Is it more volatile? Is it less volatile? Does it tend to move up? Does it tend to move down? This is what we're trying to, take a look at, how it may behave post open, right? So if we wanted to look at, well, how much did it move after the open, from the open to the high, right? So these are from the open. Let's say that, they opened here. How far on average did it tend to move from the open to the high of the day? So the average move here is 3%. So you could see sometimes, and it's a big range, right? We got 11% here. Sometimes it was 0. So you could see here, this is the range from the open to the high, from unchanged to size 11%, right? Median move up 2.8%. What about from the open to the low of the day, right? How many times, how low did it get from the open? Because it could trade above, below. So from the open to the low, we see on average 2.5%, right? So at least as far as the average goes, we see that it was skewed a little bit towards to the upside. So when the magnitude of the upside on average exceeded the magnitude to the downside. And if we wanted to look at the median, because the average can get pulled out, I don't see an 11% down. So the average could get pushed up because of this 11%. So I'm going to come down here and look at the median move. So that's right, the middle move. So yeah, when we looked at from the open, we see that when the up moves were stronger than the down moves. All right, so there's less liquidity to the upside than there was to the downside. So that's one thing to keep in mind. What about to the end of the day? So how often, did it add to gains, retreat, stand change? So we could see here from the open to the close, we see that 67% of the observations, it continued higher. So even though it gapped higher, it added to those gains 60 of our observations, 67% of the time. 33% of the time, it was lower from the open. So it doesn't mean it gave up all the opening gains, but if we're talking about from the opening price itself, it retreated 33% of the time. You could see here, those are the times in the red. On average, the move from the open to the close, let's say you're doing a strat from the open to the close, the moving was 2.8%. So in either direction, it still had a 2.8% move on average in either direction. So it still has some volatility, almost 3%, on average, the move with a max move of 10.7, maybe move of 0.5. So big range here, right? So keep that in mind. It's a big range, average 2.8. And here's the best move from the open to the close and worst move in the median. And this gives you an idea of the distribution of returns, how the stock tended to behave, post earnings after a big gap up. Right now, you have a better understanding, how it behaved historically, the tendency, magnitude of the moves, the potential risks and rewards, the volatility, and it paints you just a better picture to see how else, how do the option markets differ, how do they line up relative to these stats.
All right. Hopefully that answered your question, Rob. Thanks to everyone for joining. D, we're right up against the opening bell. Great job.
Today we have a webinar. Sorry, we forgot to mention.
Webinar. The webinar plug. IBKR webinar today. Thanks for reminding me, D. I will put that, and we're talking about option early exercise and assignment, correct?
Yep. So today we're going to be talking about call options, put options, early exercise, assignment. That will be at 2 p.m. Eastern today, but you have to register. It's with Interactive Brokers. They're hosting it. And, we'll talk about, how to manage that risk. We'll go through some actual examples. We'll try to find where a call and a put is a candidate for an early exercise.
Yep. And I had another question outstanding. This is coming from YouTube, a question. So, it's around your video, how to research the historical options strategy, performance, and earnings. It's okay. So I'll give that to you, and we'll try to get to that tomorrow. Great job, Dima.
Yep. Thanks everyone for joining. Stay safe out there. Have a great trading day, and hope to see you guys later today, maybe, or tomorrow.
Yeah, awesome. Trade and peace, communities. Have a great day.